Brilliant. Thank you. So yeah, I lead a developer ecosystem, basically helping organizations get founded into Provenance blockchain, making sure they're connected and have an easy path towards development. So it's a bit of product, it's a bit of BD, and a bit of DevRel all kind of rolled into one. Provenance blockchain, we were founded back in 2018 by Mike Cagney, the former CEO and co-founder of SoFi. And him and Jun Ao set out to build a blockchain for regulated financial services from US perspective primarily. And if you fast forward to today, what you have is Figure. Provenance blockchain was spun out as its own foundation. We're a nonprofit that helps to grow the ecosystem. Figure is now the largest HELOC provider in the US, a non-banking HELOC provider, excuse me. They did a little over 1 billion in HELOCs on Provenance in October alone. And Provenance was really kind of built and constructed out of people diving into the regulatory mud and trying to figure out the end-to-end financial digital asset lifecycle from that regulated perspective. And so if you were built on the Cosmos SDK Tendermint platform, and we add purpose-built components into the ecosystem that make it easier, cheaper, faster, safer for large-scale enterprises and institutions and fintechs alike to build products and services on blockchain while staying compliant and while adhering to whatever their regulatory jurisdiction may be. In a sentence, Provenance blockchain is a blockchain for regulated financial services.
Okay, great. I want to unpack all that. I should probably say it's sort of understood, but Infineo and Provenance are collaborating, and so if people want to know, that's partly why we're so interested. But we chose you guys for a reason, and so that's partly why we're having you on the show and so forth to showcase what you're doing. Okay, so a lot to unpack there. So maybe that's one thing we can start with. I think at this point in the conversation, the people are having, it's moved beyond this, but there was a period, not in the not too distant past, where the randomly selected person, maybe even who was in the financial sector, they heard crypto, they heard blockchain, and they thought, oh, that's a completely unregulated Wild West, almost by its design and nature. And so, for you to talk about a blockchain dedicated to regulated financial products, especially in the United States, that almost might have sounded like an oxymoron. So can you just talk a little bit about those two different competing visions?
Yeah, sure. And I think people are right to have that hesitation. There are a lot of scams and problems in the blockchain industry, and it's fairly prevalent. And I think that's where Provenance blockchain has really shown out because, if you look at, I talk about Figure a bit because it's useful to understand, how we have the ethos we do and why we have become, a leader in real world assets in that regulatory space, is that if you're trying to build a blockchain that follows the regulations in whatever jurisdiction that you're in, sometimes those regulations haven't been written yet. And it can be very difficult to comply. So Figure had a habit of working very close with US regulators, making sure that as we went through, whether it was HELOCs or private equity that was being issued on chain, that we were taking all of the steps that you need to do to comply with the existing ecosystem. So hard examples would be KYC, AML, that's sort of a first stop, qualified custody of assets, ensuring that you have the tools that you need to do reporting and analytics, making sure that you're doing monitoring and evaluation. So for example, we have one of the leaders in the monitoring and evaluation space that's plugged in, that offers services to anyone in Provenance that works alongside the SEC. So that way you can get transaction scores to understand how much risk you may have in trading with a counterparty. But fundamentally, what we allow you to do is go as fully private or as fully permissioned as you need to be. So you can have a private zone construct where you fully control your validator set, and we can get into why that's needed. But fully control your validator set until the moment you can push a button and there's regulatory clarity that will allow you to bring assets onto a public chain. For those who do have more of that public mindset or their business use case allows them to be on a public chain, then they can come in, build fully public. There's 60 plus validators around the globe that support transactions that are happening on Provenance. And you can dial in your level of risk. So for example, maybe your asset is in a jurisdiction where you don't have to do bank grade due diligence on trading with a counterparty. Well, you can then set what criteria you need in something we call the attributes module that allows you to dial in exactly what you need for your asset to trade with that counterparty. Maybe you're a more risk averse player and you need a basket of KYC providers to be able to approve and ensure that your asset isn't going to trade with a various third party. Then you can dial in exactly who you need in order for that asset to trade. So the point is to allow people to go very granular with their regulatory needs.
Okay. A lot to unpack there. Again, I'm trying to figure out what's the best way to approach this. So yeah, let's start simply. Like folks, don't worry. Like I'll start very basic, for people who really don't know this, but we'll quickly get into, areas that are more interesting for those who know the basic outline, but I don't want to leave anybody at the curb, as I say. Okay. So the big picture is, if you're a company that deals in the financial sector and you have assets that you want there to be some liquidity and you want there to encourage trading in these assets, using the blockchain, just big picture, has a lot of utility because, there's certain characteristics of it in which it's more decentralized than, like what would be the case 20 years ago, even with, digital finance. And there's various nice things about it, like you don't need to have people sitting at a customer service desk and so on. But the problem is, if it's a purely public chain, and correct me if I'm wrong, Joshua, but by that you mean the sort of thing where the entities that can come on board and participate in the designation or the determination of what's the next block that gets added to the chain, that's open to the world. Like if you wanted to log in and become a Bitcoin miner, no, you don't have to go get approved by somebody. You don't have to show who you are. You can try to do that. Whereas when you're talking about like having a validator set and things like, is that what you're talking? You're restricting what type of people can come in and sort of be like the referees as to which provenance transactions get approved and added to the chain?
That's right. Yeah. Maybe let me give you like three concrete use cases that kind of explain that.
Yeah, you're probably more used to explaining this to newbies than I am, so go ahead.
No worries. So I'll start with fully private. There are some regulatory jurisdictions that presume, and there's no legal precedent for this yet, but there's a lot of assumption in some of the regulatory sandboxes that exist around the globe, whether you're in MICA or Luxembourg or APAC, et cetera, UK. There are some regulatory jurisdictions that view validators as broker-dealers. And meaning if a validator approves a block that has your asset in it, or if you originate your asset and that is touched by a validator, they view that as being a broker-dealer, but it also could have side consequences. Like if you want your asset to be underneath Luxembourg jurisdiction, for example, or maybe you're a Swiss entity and you want it to be based in Switzerland, and you go to originate your asset and inadvertently a US-based validator originates your asset, there's big questions now about which jurisdiction your asset falls under now. Is it under US jurisdiction? Is it under Luxembourg, et cetera? So controlling your validator set can often be something that has to be baked in to comply with local regulations and ensure that you are in the right jurisdiction. Okay, that's one example. There's a bunch of other examples for this one. On public, it may be that you have every intent to do KYC and know your customer under AML guidelines. And you set out as entity.
And that's anti-money laundering, just in case someone...
Oh, excuse me.
Probably 95% of listeners probably do that, but just make sure.
Yeah, they do for that. Yeah, so under anti-money laundering framework, you have to know your customer. And if you don't, there can be some very hefty fines. Your business can even be shut down. So you can have every intent to do KYC initially, but once your token is on a public blockchain, on most blockchains, you can't then control who that trades with, right? So you may know your initial customer, but then that customer may trade with a third-party counterparty, and now all of a sudden you're out of compliance. You did everything you could to stay in compliance. So Provenance has those controls, or we say even the third or fourth party that you trade with, if they don't meet certain know your customer or AML framework guidelines, you can choose whether or not your asset will trade. We don't want to be in the business of deciding for you. That should be a business choice for you personally and in your jurisdiction, but you can make that choice. And then the last piece is, some constructs demand certain levels of privacy. And when you are trading on public blockchain, transactions get added to a pool called the mempool, and everyone can see that who is validating. They can see what transactions exist in there, and all of a sudden you end up with what are called meta attacks, where you can now start front running trades. I can see Bank X is about to buy in dollars of Y asset, and I can then front run them with my validator very quickly and change the price significantly. I can do that in the middle with something people call a sandwich attack, or I can do that at the back. And there's lots of meta attacks. So there's kind of those are three examples of why you may need privacy, why you may want to bake in, compliance, and why you may need a private construct instead of a main.
Okay, great. And again, the big picture is, you did a great job there explaining some of the real world messiness involved and how, hey, one thing might seem great, but then, oh wait, there's these issues. And so again, you just leave it up to the client, like the party that approaches you guys and says, we're thinking about building on provenance. And then you just consult with them and give them tips in terms of what their business model is and the regulations, so that if it's a good fit, they turn all the dials and figure out the best way to use provenance.
That's right. We have two ways of helping people make those decisions. So one, if you're coming to the foundation, we have a hash grants program. We have blockchain solutions engineer who will come in and, we offer a minimum number of hours within the resources that we have to help you design exactly how you're going to get on provenance, how you'll take your business use case and apply that onto, a blockchain use case. And then we also have something that's just being stood up called Prov Labs. For full disclosure, I think Infineo is one of the customers of Prov Labs. And what we offer is capital markets expertise. That is a for-profit entity separate from the foundation that then helps people go deeper into exactly how they would design their builds, how they would construct everything that they need to kind of be off to the races on provenance. And what you end up finding is many of the assets that are starting to come on and be built, many of the proof of concepts that are being built, they're very new. And people end up needing a lot more support sometimes than they may think if it is an asset that already doesn't have an existing roadmap out there. And so that's where Prov Labs steps in.